Okay, so we've got yeah, the VIX. Let's go with markets. See where their markets are at. SPX. Okay, when it's up or down 10, I normally say it's flat, but it's up just barely. Um, yeah, barely up. E-minis. VIX. Where's their VIX at? Okay, looks like market's just open. So VIX is flat. Let's see. Oh, wait a minute. I know why. I got the wrong. I tried to put in a symbol. Yeah, VIX is little. It's up 2%. Nothing major. Okay. So markets, VIX. Let's look at the cost of money. Man, that Intel trade, man, it's starting to get out of hand. Let's look at the cost of money, bonds. Let's see what we got out of bonds. Those are flat. Basically, everything's flat, which I expect. Cyber Monday. Let's see what happens since we're short deltas if we try to roll that strike up, even though it's only 11 deltas. I tried last week to do it, but it would not let me do it. Okay, if we went to the 12, if we went to the 23 delta, get $36. Let's get a little bit more out of this. Let's see where Intel is at. Yeah. So, I mean, it could drop. It gapped up today. It could drop to the 2270. Let's see where that is at 2270. And let's see what that mountain looks like. Nah, I'm not going to freak on Intel yet. Well, yeah, wait a minute. Yeah, I am. Okay, so let's move that strike up. Try to center it in that mountain. Well, because it's 12 deltas. And let's see if we could get it at that 23 delta. 36. Okay. It did hit our buying power a little bit, but at least we're centered. Let's see what we got. We got a little bit of credit on this. Yeah. Centered a little bit on this. We're still short deltas, but we did get a little bit of credit. To make sure Intel, activity, Intel only, filled orders. Yeah. We were trying to get filled with a much more credit was it? No, that was the I was trying to do a Jade Lizard on it a while back. So yeah, we got so we got a little bit more credit on Intel. X. I keep trying to roll this, but it does not want to roll. Let's see what we got. Or let's look at our curve. Yeah. I mean, yeah, we're definitely in that zone where, I mean, how many rolls have I already gotten? I mean, we're off the mountain, but we're definitely off the mountain. Or over, not totally over the mountain, but it's definitely. And that's X. Oh man, I got the wrong one. Hold on. Yeah, okay, no, I got the right one. So that's X. I would love to center it a little bit more. Although the expected moves. Yeah, no, we're out of that expected move zone. So let's do one more roll on X. So, okay. I tried to get credit on this last week. Why it's saying, yeah, 77-cent credit. That gives it a 54% chance that that thing will get touched to the downside. Yeah, see. Okay. Yeah, I was trying to get into this Friday to roll it, but there was nothing happening. So we'll see. Yeah, because this thing has just been plaguing me. Yeah, because this thing is just. So if it got to the 42.30, 42.30, it would definitely be painful, much more painful. But we're just going to sit here, try to get more credit as this thing goes up and up and up and up and up. Although it's still within our range of profit, it's just, and how much we getting? We're getting paid $1.23 on that. No, we're getting paid $10 a day to hold this, our theta, even though we're 22 deltas. So, we'll see. All right. Markets are flat. VIX is really, there's not much there. Basically, yeah, markets are basically flat. Yeah. Yeah. Okay. So we'll just sit and wait. Let's look at Bitcoin. Bitcoin was getting hurt last night. It's much better. Yeah. Bitcoin's the cost of speculation. Let's look at oil. The cost of economy. Really, oil's doing nothing. Let's look at gold. Cost of reality. Yeah, gold, okay. Gold is starting to get a little bit less volatile. And we were in the GDX. Let's see what GDX looks like. Metals have been plaguing me all year. Yeah, metal GDX is down. Let's take a look at okay, yeah. Implied volatility is the 5-day trend has been going down. We want to see it green going up. IV rank. It's okay, IV rank. Let's go to IV index. The IV index is pretty low. So chances are you won't be getting paid a lot for gold for GDX. Let's see, let's go back to that trade page and take this off. Yeah. Chances are you won't be getting paid a lot for that if you went to try to do January 17th strangle. Let's see, that's 21 deltas. Let's go to 15. Let's go to our 16 delta. 18's close enough. 52 of 373. No, you're not getting paid enough for this, for GDX. Let's go with the junior miners. GDXJ. See if you're going to get paid enough on that. 16 deltas. See if you're going to make any money on that. A little bit of skew in there. 112 of 471. Nope, you're not getting paid enough for that. You're getting paid more, of course, than the GDX, but a lot of that is you got that implied volatility. Actually, it should be going up because this is a commodity. When the market falls, it goes up. But if we look at the 5-day trend of implied vols in this, actually, it's gone up in GDXJ. Okay. But still, yet you're still not getting paid enough for it. 112 at a 471. You do have 83%, 85% chance of making 50%, 73% chance of making a penny or more. You get paid $3 a day on this. I'm gonna keep my eye on this. From 80 to 140, it's kind of wide. You've got this, see 112. Let's see what their market looks like. Yeah, it's it could get down to 44. This thing has the ability to move $2.30 a day. It's 47. It can get down to 44 in a heartbeat. Let's look at that mountain. A lot of skew. I mean, a lot of gamma. Definitely has a major gamma situation there. Let's do this. Let's move this back. Okay, I can't. Oh man, I just want to get more real estate on the screen. Okay, let's go with trying to get, because I got a smaller screen. I wanted to see what our gamma is on this, just to see, because that looks like the gamma is oh come on, I know I got more. Let's see where like theta, I need theta in there. Let's move gamma up so I can actually see it. And we're gonna move, wait, no, we do need theta. We need theta. We'll move Vega down a little bit. Okay, let's see what we got here. So I want to see. Oh, gamma, there it is. So yeah, that's why $8 in gamma. You lose or make $8 for each dollar this thing moves. That's why that curve looks like a major frown. That gamma. But anyways, if I were to do this, I really want more out of it. And I'm gonna see if that market could come up to me. I'm gonna go between our mid and the price of will more than likely not get filled. The market maker's price. If I were to do this, I would do it like that. So we'll just do that. We'll put that trade on. Let's see what else. See if that gets filled. And yeah, we got that one in. Cool. Now let's go and see some more trades. And so Intel, yeah, we got Intel, that one, the weed stocks, I don't care. Those were basically cheap trades. So I'm gonna just leave the weed stocks alone. And ARK Invest is a free trade, so we don't have to deal with that. TLT is still a free trade. One of these are December 20th. Okay. Wow. ARK Invest should be January. No, that's December 20th. Okay, those are free, so we don't care about those. MSOS, that's February. Tilray, January. VIX is a dead trade, so I'm not going to even attempt to even think about that. X should be January because I moved everything out to there. Yeah. So we moved that to January. Okay, let's look for some more new trades. Look for some new ones. Okay, hold up there, Brother Will. Hold on for 1 second. Okay. My bad. I forgot I was still in mute. Man, you can tell I'm not getting sleep. So let me just go back over this real quick. You can tell I have not been sleeping. Yeah. Yeah. I was, man, at that workout. I mean, that workout was brutal. You know, yesterday because I walked how many miles? I walked 7 miles yesterday. I didn't even know I walked 7 miles. Wow. Well, it says seven. I say about 5 miles. Yeah, I always underestimate. Let's go back to the SPX trade that I'm looking at, the calendar, because I'm looking at buying volatility on that, selling volatility on the GDXJ. And the thing about the GDXJ is I'm still trying to get the price that's in between the mid price and the market maker's price. I'm gonna see if that market will come up, and the closer it comes up, the more I go down, and then we'll see if we can get a we can agree on a trade right there. The SPX is the other one, the calendar trade I was looking at, which is that going up 10 $10 on that, because I'd like to buy volatility. And I look at probably doing that later on today. So that's a 613 calendar at 645. 10 about $5. No, let's go. Yeah, we'll go $5 up. So the 645 earlier I had $10, but 613 calendar 645 between and that's next Friday. So I don't want to stay in this thing until I don't want to stay in this thing. Wait, a six no six. Yeah, six. No, I'm sorry, I got the wrong one. Hold on. I want to go out next Friday, so that'd be a 1317. My bad. Because I want some room on this 13 and 645 and 17 at 645. Go up $5 a little bit, just going up a little bit. It cost around $5 for this particular trade. Analyze our break even is at theoretical break even. We're looking, or if we look at the curve, theoretically it's between, say, around 6,000, and we were at around 6,200 or 6,181 as this thing is moving around. So this is what our curve looks like. The thing is if we were to drop down, go theoretical, if we were to drop down to 6,000 between say today or tomorrow, let's say tomorrow, if it dropped down to 6,000, you'd be up about $43. Remember, we don't want to stay in this after Friday, so we'll say the 5th, Thursday or Friday. Get out before then, Monday at the latest. So we'll go to 6. So if we stayed in it, again, this is just about getting income. We do have a good chance of making about, I mean, it should be about 10% of the money. It's showing us more than that. It's showing us damn near 30%, but it shouldn't be that. I know, yeah, about 30%, or yeah, about 30%. It shouldn't be that. But all things being equal, if volatility goes up, and I'm using per contract IVs, so if volatility goes up on the back month, but between now and this Friday, and stays in the front month, then you're looking at pretty good profit. If it goes, and that's theoretical, it's still good either way. At least in Tasty's theoretical, it should be the theoretical price. If so, and that's between now and this Friday. So, and again, you don't want to stay in this. If it went to 6,200, 6,200, you would be down around $60. And if volatility went down a point, I mean, you'd be basically you'd be down. You're making more than you're losing. Volatility, because this is a volatility play. It's just you're buying volatility instead of selling it. So, and that's by this Friday. If because remember, this thing can move $87 either way. The expected move between now and this Friday is $87, and you're only down. Your break even is down $40, but it is up at that $80 range to the upside. So, or 70-ish buck range to the upside. So at least you have some room on the upside. Just a simple calendar. You're going to tie up about $500 or $5 to do this. And as if you were to do this trade. And let's look at your deltas. Your deltas, because again, this thing between now and Friday, this thing can move between now and when you want to get out of the trade, which is the 6th. Actually, $58. So this thing can move $50 between now and this Friday, because you're not going to want to stay in, say, Monday at the latest, or Tuesday at the latest, we'll say. Tuesday at the latest, which would be the 9th. Let's see, no, what is Tuesday? No, the Tuesday is 13. Tuesday, what is Tuesdays? Yeah, is the 10th. So if you were to stay in this till the 10th, you have a $70 move either way. So $70 either way on this thing. So if you went down to the that's 60-40. So that'd be 60, what is that, 67 or 59.70? That would be around, you got a 48% chance of getting down there easily. That's around, I mean, that's close to your expected move. And then to the upside, 61. And you got about a 50% chance of getting up there. So if I did this trade, I'd get in a lot cheaper. See if I could get in cheaper than the 515. But I'm going to wait a little bit later into the day because I don't like putting calendars on early. So I'm going to wait a little bit later in the day on this trade. That's one I'm looking at doing. Just to go ahead and get some premium. Man, my screen doesn't show. Damn, man, I'm really tired today. Yeah, thanks a lot. Oops, wait a minute. Before I share the screen, I gotta put the thing back on. Yeah, you can tell I'm tired. I've been on the live stream too long, so I gotta make them a lot shorter. Oh man. Let's see why it's not opening. Okay, maybe it's gonna take a minute to open. Well, I guess Murphy's Law doesn't want me to open it. For some odd reason, it's not opening right now. And I do have enough memory, or should have enough memory. I got a lot of screens open. Oh, there we go. Okay, let's do this one last time. We'll see. Man, oh man, my shoulders are killing me today. Man, oh man. What I do is I do like a muscle up, straight bar dips, pull ups, and then I just do that round, and do as many as I can, and I'll just keep doing that over and over and over. And muscle up, straight bar dips, pull ups, muscle up, straight bar dips, pull ups, and it got to the point where I was like, especially with how bad my shoulder was hurting. I said, nah. It was like, nope. My shoulder said, no more. So let's do this one last time. Share the screen, and we're off mute. Okay. Okay, let's do this. Let's take one of these off. Okay, now do it one last time. Hopefully you got your Tasty Works. You ever get your Tasty Works happening? Get your account. Because I tell you, it's much easier. I mean, you could do this on Thinkorswim, but Tasty Works is the way to go. Anyways, we got a December 13, 13. Wait, that's SPY. I'm looking at that SPY. Let's go to SPX. Hopefully you're seeing it and hearing it. And let me know if you got your Tasty Works. Hopefully, like I said, you want to definitely get your Tasty Works account. But a 1317 calendar. Sell the 13 by the 17 at 645. Markets are going up, so I'll have to do this at 650, which I don't mind. 1317 calendar, 650, 1317, 650 calendar. So you spend about $5 on it. $5 in the calendar. Okay. And it's an income trade. So, you want to be out of this trade no later than Tuesday, which is the 10th. It's got about a 69 or 59, is that 69% or $69 dollar move. So it could go about $70 either way, up or down, which puts you around the expected move on December 10th. Expected move going down to like the 59.70 or up to the 61.10. So that gives you around a good, it's basically within that expected move. You have the theoretical. I went over the theoreticals, so you can listen to that. Is how much that you would make or lose depending on the and how far it goes up or goes down. At the 6,200, theoretically you can make, and again this is theoretical. At 6,200, if it got there tomorrow, 62, and of course it would have to fly up there tomorrow, but you'd be down about 67. If it got down to the 59.40, you'd be down at about $165. But here's the kicker: if it goes down, volatility goes up a point. You'd be up about 188. If it went to the 6,200, because usually volatility goes up when markets fall. If it goes to the 6,200, volatility goes down a point. You'd be down like 117, because the front month vols will go down with the back month vol. So, I mean, that's just theoretical. Of course, that's theoretical. Your break-evens are around that area where, your break-evens around 6,000 and 6,200. So you do have a lot of room to the upside, because remember, markets have just been going up and up, and there's a lot of cost skew. Cost you around $5. If I went and did this, I'll try to back this off. Like right now, the mid is 510. I'd take the mid down, because I'd take it down to like 495 just to see if it'll get filled, and that's later on today. So that's basically what I'm looking at on the calendar. Outside of that, other than that, the GDXJ is the other trade I'm looking at. That GDXJ. Let's see, we're Intel. Okay, our Intel trade. Okay, we're more delta even on that, so I'm good. X. Okay, we're 21 deltas, but I'm gonna see if we can get filled, because I'm trying to get filled. Okay, it was a much bigger credit than it is now. I'm still trying to get filled, but I might have to back that down on X, because I've done enough. I mean, still yet. I mean, look at the spread between the mid price and the market makers. It's way up there. It's way up there. But we'll see if we can still get it. If we can still get filled. Again, this is just that. It's that trade. It's the one that's been dogging me. So what? It is what it is. You know, remember that SMCI? I am so glad I got out of that. You know, I mean, it's up at 37. And I think that when I got into it, I mean, it's just through the roof. But I still think it's going to go to zero because they were already talking about delisting. Look at it. You know, it just needed to fill this gap. I still think the stock is going to go to zero. It is what it is. But I'm so glad I got out of that because that would have cost a gangload of money right now to get out of it. So I got at it, just a trade that got away. It is what it is. Outside of that, just the SPX trade is a calendar because I think volatility has a good chance of going up. The SPX trade is a calendar and a GDXJ is a condor. I mean, as a strangle, and that's just purely for income. That's all these are income-driven trades. It's not for trying to speculate and say a market has to go somewhere. Oh, it's got to go up, it's got to go down. I don't care. Anyways, just to give you an idea, that's kind of what I'm looking at there, Brother Will. And again, have you gotten your Tastyworks yet? You get your Tastyworks account. As I tell you, Tastyworks is where you want to do this. I mean, you could do it on Thinkorswim, and Thinkorswim looks cool, but for trading, it's got to be Tastyworks. Anyways, hopefully that works, and we'll see what happens tomorrow. Take care.